If you're a US investor, you may be feeling pretty concerned about how Donald Trump is turning the pandemic into an ideological battle about freedom instead of focusing on the unprecedented health crisis that it is. Then again, some traders may be hopefully eyeing the president's insistent claims that he will get the country up and running again sooner rather than later, even if that's the irresponsible and long-term, more costly option. It hasn't seemed to really negatively affect the Dow Jones all too much, however. Though it wasn't the smoothest week last week, the Dow Jones did end Friday above 24,250 for the first time in around 5 weeks. That was largely off the back of positive reports surrounding Gilead's COVID-19 remdesivir trial. Any further news regarding that drug could be a huge help to the markets in navigating what is likely going to be a tough week for data, even if the drug trial news might be sort of still on the ground. You know, you're not going to be getting constant updates. That report last week might be the only one for a while. Like elsewhere, Thursday is easily the most important date in the economic calendar for the US. While 22 million people were made unemployed in the space of 4 weeks, there were a couple of paper-thin positives to take from last Thursday's jobless claims reading. Firstly, it was marginally better than forecast by, I think, around maybe 100,000 people. 100,000 people fewer applying for unemployment, that is. Secondly, it was around 1.25 million people lower than the previous week's number. Investors will be hoping that the number of new unemployment claims continues to slow down this Thursday, even if a multi-million person reading is still likely. Meanwhile, for the flash market, manufacturing and services PMI is also released on Thursday. March's 48.5 and 39.8 are the numbers to beat respectively. Those figures will be preceded by the European equivalents, all of which are expected to fall even further month on month. Elsewhere, you've got the existing home sales arriving on Tuesday, with new home sales on Thursday, and the revised UOM consumer sentiment and durable goods orders on Friday. In terms of earnings, the week's highlight is easily Netflix. Last week was a big one for the streaming giant. At one point, it overtook not only content rival Disney, but ExxonMobil, Costco, and IBM in terms of market cap. And that was before it released its first quarter figures. Those first quarter figures are coming on Tuesday. Netflix itself is expecting a 7% rise in net subscribers. However, that forecast came before the pandemic struck. The streaming service has been one of the few unquestionable beneficiaries of this new reality of ours. Just look at the fact that it's now worth more than ExxonMobil. I think that's really telling. It's just a brief snapshot of how things have changed in the last month. So investors may be disappointed if the actual number of net subscribers isn't much, much higher than that 7% rise that was forecast, I guess, around its fourth quarter figures. Investors might even be expecting a record-breaking number of new net subscribers. Revenue, meanwhile, is set to jump 26.1% to 5.7 billion, which I think is down on the 30% plus rise that we're seeing in Q4, with a massive 113% surge in earnings to $1.62 per share. Just as important will be the guidance for the second quarter, given that unlike Q1, that entire period will likely be spent in some form of lockdown. That means if a record-smashing number isn't forthcoming in the first quarter, it could well be on its way in Q2.